Oil prices jumped and stocks recovered after a shaky start, even as the markets eye the ongoing U.S. military action against Iran and Iran's retaliation. So for more on investing in this volatile environment, joining us now is Ruchir Sharma, chair of Rockefeller International and founder and chief investment officer at Breakout Capital. It's good to have you join us, sir. Thanks so much.
Thanks, Lindsay, for having me back.
So it's interesting to see the markets, turn positive after a bit of a nervous start today. Do you think investors are already kind of taking this military action in stride?
Well, I think the long history of geopolitical conflicts is that markets tend to recover after like an initial shock. Now, what's happening is that time horizon is getting more and more compressed because historically the work that I've done on this is that if you look at all the major geopolitical conflicts in the post-World War II era, the average decline of the S&P 500 or the US market has been about 4% or so, and it tends to recover that within a month. But I think that research seems to be now well known, and so markets are getting even quicker in terms of shrugging this off. I think the basic calculation is that these are temporary blips, and they don't do much to interrupt the economic cycle. And overall, the economic cycle looks pretty okay, which is that the global economic recovery is still on. And yeah, oil prices went up 5-6% today, but from a relatively low base. And so I think that the overall calculation is that this is not going to be a very drawn out conflict. And also the fact that the initial success that Israel and US have had is also being reflected particularly in those two markets, which is that the best performing market in the world, ironically, this year, or at least today, and even since the conflicts began in the region back in October 2023, has been Israel. So I think that that's what's telling you about how power is shifting in the region and who's prevailing.
So I take your point that you mentioned off the top that it really is like that initial shock and then the markets kind of absorb it. But you did mention, the timeline of this because President Donald Trump has said that the military action could last a few weeks. So could we see more of an impact, particularly on energy prices, if this were to go on longer?
Yeah, there are all sorts of scenarios in play. But I think that the market is taking the basic bet that this is not going to last too long and that the success, or the apparent success at least, that Israel and US have had initially is encouraging from their standpoint. So therefore, even some of the local markets in the region, if you looked at what's happened in the Saudi market or the Egyptian market, they all fell about a couple of percent, but nothing major. So I think that that's the basic bet the market's taking. Now, you can say that's a wrong bet, but I think that the basic bet the market's taking is that one way or the other, this conflict doesn't last too long.
Okay, in terms of whether this could impact, potential inflation, raise inflation, do you think it could? And how do you think the central banks might react to that? Could they become more hawkish on rates as a result?
Yeah, I think that, there is no real meaningful impact because as I mentioned to you that the rise in the price of oil so far doesn't really do much to move overall inflation. I think someone, did a study in this that this isn't even amongst the 35 greatest one-day oil price rises that we have seen. So in that way, this is really nothing off the radar. This is pretty much par for the course as far as market moves are concerned. So I think that I know that this is the really big news event of the day, the week, and may last for a while. But at least from a market standpoint, if you look at the market moves, including the price of oil or other financial assets, it's pretty mild compared to anything that we have seen in the past.
Right. In terms of the volatility, though, right, like just coming at us from many different directions, there seems to be a lot of different factors that are causing volatility in the markets, the military conflict, U.S. tariff uncertainty, to name a few. How do you think investors should be navigating all of this?
Yeah, I think that what they need to keep an eye out in, obviously, are some of the more economic factors, because predicting geopolitical events has never been the strength of investors. And as I said, that more than 90% of the time, these geopolitical conflicts blow over. There's always a small probability that this is something far more sinister that we saw like 100 years ago or something. But I'd say that those probabilities are very hard to discount. So I'd say keep the focus very much on the economic cycle And here, I think that the bigger concern for me is what's happening in the credit markets, which is that we saw that in the private credit markets, there are some problems which are emerging. And then also, obviously, the whole AI trade, which is that is this now reaching a level where it's becoming far too optimistic in terms of what AI can do? Are we seeing the classic overinvestment that we see after big technological breakthroughs and all the excitement that leads to? I think that those are the fundamental factors that I'd keep an eye on. And as far as the geopolitics is concerned, yeah, it's obviously harrowing time when you see these kind of news headlines. But this is not what really drives economic cycles more than 90% of the time.
Okay, we'll have to leave it there. Ruchir Sharma, chair of Rockefeller International and founder and chief investment officer at Breakout Capital. I appreciate your time. Thanks so much for joining us.